Electronics is one stock that has been one of the biggest movers this year. The company's cumulative order win for FY24 is over 23,000 crores, and they've recently secured a new 4,500 crore order from the army. So this defense space is buzzing. My colleague Vivek Iyer caught up with Bhanu Prakash Srivastava, the chairman and managing director, to discuss more on their order wins and business outlook. Listen in.
As of now, with this 4,522 crore order of electronic fuses, we stand at around 23,200 crores of order book in this financial year.
Okay, sir. So, can you give us some more details about this particular order win itself? What is the kind of execution timeline that you're looking at, and what kind of margins do you intend to operate at?
This is a long-term requirement of electronic fuses by Indian Army. This is for 10 years, and every year we have to supply around 5 lakh electronic fuses. This we have won on competitive tenders. We participated. The procurement process started somewhere in 2018, and it fructified now after a long time. Margins are normally product-wise margin we don't share. But yes, we are profitable in this.
Absolutely, sir. So now we are still left with one full quarter as far as FY24 is concerned, and you've already exceeded your order inflow guidance by 3,200 crore. One quarter still left to go. Which are the key orders in the pipeline? Which are the orders that you expect to book in Q4? And what is your revised order inflow guidance for FY24?
We anticipated around 20,000 crore plus orders based on the whatever orders were in pipeline. But thanks to the speed with which MOD has been working, we met the guidance and reached 23,000. A few more orders are in pipeline, but then it depends upon when at what point of time they will fructify. One is that EW system for ships, which is around 2,000 crores, which is in pipeline, which we expect to be fructifying in this financial year. Some smaller orders may be there. So seeing in pipelines, we expect to cross around 25,000 crore in normal course. If at the end of the financial year, MOD fast track some more, then we will share with you.
So the revised guidance that we are getting from Bharat Electronics in terms of order inflow guidance stands revised upwards from 20,000 crores to well above 25,000 crores.
So you mentioned 25,000 crore plus. Yeah.
Absolutely, sir. So last time you mentioned about visibility in terms of getting orders from the shipyard space. In fact, you spoke about getting artillery fuses orders, ship-based early warning systems that you just mentioned. This is from Goa Shipyard and Garden Reach Shipbuilders. What would be the likely quantum of orders from here? And FI will you be able to book it in Q4, or will it spill over to the next year?
We have started working with them. PNC and all is over, so they have to process. Now with their internal, how much time they take to award the order, it varies. Like if you see fuses, we have been talking for how much time? More than a year. Every quarter you were asking, and I was telling it is likely to come, and ultimately it was signed on in mid-December. So these orders also, they are in pipeline, various stages, but it is the internal process of our customer, whether Goa Shipyard or GRSC, when it will fructify. But we are on the job this quarter, or maybe we expect this quarter, but we keep our finger crossed about their internal process.
So the market is very keen on knowing, when will you be getting the orders on large projects, especially, the quick response surface-to-air missile. Will you be able to get it in, the first half of FY25?
I don't think first half of FY25, because these are all big ticket orders. This is quick reaction surface-to-air missile. So it will take time. Even they have not taken AON. So once AON is taken, then it will go for finalization, then RFP. After that, submission of code, PNC, order processing. It's a long-run process. So definitely, first half of 25, I don't see any possibility. Fastest, I see that something can happen in the end of FY25.
So last time when you spoke to us, you said that revenue in terms of booking has been a little lumpy because execution trends have been hampered by on-ground challenges. Do you now stick to your guidance of being able to reach 15% in terms of top-line growth for FY24? You'd earlier given a guided range of 15 to 17%. So do you stick to the 15% range?
15% range, we are making all-out efforts, though there has been a challenges in supply chain, which has been further complicated with this Israel conflict. But these are all uncertainties which is very difficult to predict. See, tomorrow some situation improves and then we recover. So we keep our finger crossed. We are attempting to achieve a revenue of 15% growth in this financial year. All efforts are there from our side, and we are in constant touch with our OEMs and supply chain partners also. So let us see at the end of financial year, we are making all attempts to reach to that stage, that value.
R&D spends for you have been a little over 6% of the total turnover in the last couple of years. Now, with these increased R&D spends that you're targeting, can you now start looking at higher margin, more value accretive orders, especially as far as the export market is concerned?
See, when we spend in R&D, it's not only export. All products, our margin improves because more value we add, better is the margin.
Sir, absolutely. So a couple of analysts that we spoke to have highlighted two concerns as far as Bharat Electronics is concerned. Number one is the best of top-line growth as well as rising returns over for Bharat Electronics. Number two, will increasing defense production, outsourcing to the private space, diminish the prospects for Bharat Electronics? How will you respond to both of these concerns that analysts have raised?
See, competition will be there. Private sector also will be participating. But then if you see the government policy, government is increasing the procurement from indigenous industry under the Atmanirbhar Bharat. So private sector also will participate. We will also have a space. They will also have a space. But the way we spend on our R&D, the way we add value to the customers, we remain the preferred choice of the customer. So coming years, I don't think that our growth prospects will be hampered. But then we have to remain competitive. We have to remain spending and focused on research and development to add value to the customer to maintain our momentum.
So last question from our end. FY24 margin trajectory, FY25, what kind of margins are you targeting?
See, what we have given guidance 21 to 23% of that EBITDA, what we are maintaining, this is a reasonable margins in the current scenario what we are operating. So we maintain that in FY24, and the way things are going on and the project we have order got, and then it will be executed in 25 also. We will be able to maintain in the same band that EBITDA margin.
All right, that's the management of Bharat Electronics with some perspective on the business. By the way, the mid-cap index